Hello again. Let's go ahead and take a look at our Chapter 5 practice problem, which is talking about the merchandising type transactions. This one is pretty straightforward. It says prepare journal entries to record following merchandising transactions of Blink Company, which applies to their perpetual inventory system, and it helps to identify each receivable and payable by the individual. So like for instance, they have accounts payable for a person named Bowden, or a company named Bowden. So let's start from the very beginning here, shall we? Alright, so July 1st, we purchased merchandise from Bowden Company for $6,000 under credit terms 1/15 net 30, free on board shipping point. Invoice dated July 1. So we've got July 1, and we want to debit merchandise inventory because that is our asset. We are actually buying inventory from the person. Okay, so I'm not going to type out merchandise inventory. I'm just going to put inventory. You'll know what I'm talking about. And that would be for $6,000. And then the credit, since we're doing this on credit terms, then we're going to wind up hitting accounts payable for Bowden. For $6,000. While we're at this, what I want to do is I want to open up a subsidiary ledger account. So let's put this as accounts receivable, AR, and this is accounts payable, AP, and we're going to put Bowden down here under the AP for his subsidiary ledger. Okay, and so we now have a credit balance for Bowden for $6,000. Okay, and we'll keep track of this as we go. Alright, on the 2nd of July, we sold merchandise to Creek Company for $900 on the credit terms 2/10 net 60, free on board shipping point. Invoice dated July 2nd. The merchandise had a cost of $500. So now we've got an accounts receivable coming up here. So there's two things. When you're selling to somebody, you have a two-step process. When you're buying it, it's just pretty straightforward. But on the selling portion, you got to do the journal entry for the sale to record that. So I'm going to hit accounts receivable, debit for Creek Company, and a credit to sales, and that's for the sale price, which was $900. And I'm also going to wind up doing a second part, and this is going to wind up hitting cost of goods sold. And inventory, credit, for the cost of the merchandise, which was $500. Okay, now over here, set up an accounts receivable subsidiary ledger for Creek Company. And this is not part of the EOC, by the way, folks. This is just your own notes to yourself. So Creek Company had $900 debit for accounts receivable. Okay, on July 3rd, we paid $125 cash for freight charges on the purchase for July 1, so this is back here for Bowden Company. I'm going to debit merchandise inventory, because on anything that's a purchase, everything goes to merchandise inventory. Freight, insurance, discounts, allowances, all that stuff winds up hitting the inventory account. And I paid cash, so credit cash for $125. I want you to know something about this. We paid $125 cash for freight charges for Bowden Company, but it will not affect Bowden's accounts payable. There's nothing that's going to be done with that, okay? So I want to make sure that that's clear. When we do discounts and calculate that, it's just going to be based off of the whatever's in accounts payable. Okay, on the 8th, we sold merchandise that had a cost of $1,300 for $1,700 cash. This is not made out to anybody. Okay, notice that the word is cash. So there's no accounts receivable that's going to be done here. So I will go ahead and record the sale. And I'm going to debit cash and credit sales. And by the way, it's just like this up here, except instead of accounts receivable, it's cash. And I'm going to do it for the $1,700. That's the sale price. And then I got to do the two-step portion. So this is a sale. So I need to record cost of goods sold and inventory. For the cost of the merchandise, which was $1,300. Okay. 9th of July. We purchased merchandise from Light Company for $2,200 under terms 215 net 60, free on board destination, invoice dated July 9. Okay. So I'm going to wind up hitting what? Merchandise inventory? That's right. So I'll debit inventory here. For $2,200. And I'm going to hit accounts payable because we're buying from Light Company. And then I set up an accounts payable subsidiary here. So my accounts payable for Light Company, is $2,200. 2,200 credit. Okay. On the 11th of July, we received a $200 credit memo from Light Company for the return of part of the merchandise purchased on July 9. So this is a deal where they return the merchandise, and we're going to reverse what we did here. So I'm going to debit accounts payable for Light Company. And credit inventory because they brought inventory back for $200. And I need to update Light's account here, so it's a debit of $200 here. On the 12th of July, we received the balance due from Creek Company for the invoice net discount. Now you can always go back and make sure that they did indeed get that discount. So Creek Company had a 210 net 30, on the 2nd of July, and here we are on the 12th of July, so they made it within the 10-day window, and they get 2%. Okay, so what I'm going to do is I'm going to be receiving cash. Okay, so I'm going to go ahead and debit cash. I know that's happening. I'm going to credit accounts receivable for Creek Company because that's a debit. I'm going to do the credit to give them credit for that payment, and I'm going to calculate a 2% off of their outstanding accounts receivable. Their outstanding accounts receivable is $900, so $900 times 0.02 is equal to $18 here. Okay, so that's going to be my sales discount, and sales discount is a debit because it is a contra revenue account. So for things like this, for sales type items, I'm going to record the sales discount, and again that was at $18. Creek Company had a $900 outstanding balance. I will erase their accounts payable for $900, and then cash receipt is the difference between $900 and $18. In other words, $882. Okay, and so that's paid off. Creek Company has taken care of it, so I can actually do a credit to their accounts receivable account, and they have been paid off, and that's reflected here in the journal entry with accounts receivable being a credit of $900. Sales discount's been taken into effect. We received cash of not $900 but $882. Okay, let's take this page off. Okay. Next, 16th of July. We paid the balance due to Bowden Company within the discount period. So here's Bowden. We owed them $6,000 straight out. Let's go back and find where we had done our purchase from them originally. It was back here at $6,000. We were to receive 1% if we paid within 15 days, and here it is the 16th. We initiated at the 1st of July, so we made it within that 15-day limit, and we're going to calculate 1% of 6,000. I dare say most people will know how to do that. That's going to be 60 bucks. Okay, so now if I had an outstanding credit balance to Bowden Company on my accounts payable, then I'm going to debit accounts payable to Bowden Company to erase that, and I am paying all $6,000, so that is going to be a debit for $6,000 to Bowden. I will wind up paying cash, so I'll do a credit to cash here, and it's going to be less than $6,000. So I've got to make up the difference between the $6,000 here and the less than $6,000 in cash, and that's at $60, and that's going to wind up hitting merchandise inventory. Okay. For 1% of 6,000, or $60, and then cash is going to be the difference between the two at 5940. Okay.